everyone, how's it going here on this Tuesday evening? Rick here, Hit Run Candlesticks. Thank you everyone for being here. Today's date is August 23rd, 2022. Hope everybody did well today. Thanks, B12. Thanks. Yeah, I hope everyone did well today. You should have, I think, and same with yesterday. I think you should have, so... there's always that case when that's not true. Maybe those are some things we can address in the room, on why maybe, you're not making money and other people are. That's something I always look at. Why didn't I make money today and these folks did? That's always something I find very, very useful for myself. So, but... Hey, okay, so here we are. Real quick, does anyone have any stocks you want to talk about tonight? What I'm going to do is take them really quick. I'm going to flag them, and then I'll put them in here, and we'll make sure we hit those. So we just have about a minute. So if you've got a stock, just type it in there real quick, and there we go. Ford, is that... actually Ford or F. I don't know. I'm going to bet it's F. I'm going to bet. Let's see. What was that? EV. If it's not, please type your Ford back in there again. I'm not going to even look at them now. Just do this real quick. BTU. What was that? Yeah. UCO. Flag that real quick. FANG. Okay, that's probably all we can do there. Let's see, Amazon. Flag that. MNST, I think I already have that one on there. SBLK, we'll flag that real quick. Ford, okay. SPY, yeah, we'll definitely look at the SPY. I don't need to flag that one. MO. We'll flag that one. Okay, let's call it quits there. All right, so what I'm going to do really quick here is I'm just going to move this list over to here, and I will make sure that we get to those first. So thank you for being here early. Thank you so very much for being here. There we go, paste. All right, we'll leave them just like that. All righty. We'll add. What was it? UAL. I'm not going to cut you off. We'll add that in there. Let me, I could probably do it faster like this. There we go. There we are. Okay. All right. Let's talk about the market here a little bit. And I'll tell you, we are, I think I can safely say that we're in rough, troubled waters. I really think I can safely say that. I can also say that we can calm the waters down. We can make the sea not so rickety, so rocky. We can make it so our ship glides through the water. I think I really can help with that, and that's what I want to do tonight. The topic for tonight is keeping trading simple, but maybe it should have been make trading simple, not keep it simple, because maybe it's not simple, so you don't want to keep it that way. Maybe what the topic really should have been something like make trading simple, something like that. So we're going to talk about that. I really think I can help with that. And this is rough seas right now. For instance, are we going to hold? Are we going to hold? What is that? June lows? Yeah. Are we going to hold the June lows? Well, I don't mind admitting that I have no idea. I have no earthly idea. Look, I know that, interest rates rising. I know that China has problems. I know all this stuff, okay? I get the news just like everybody else here. But I can't tell you if we're going to hold these lows. I can't tell you that. I can't tell you if we're going to break those lows, and are we going to stop at 300 on the SPY here? I can't tell you if we're going to stop there. If we break those, if we break this June low, this 362 area, I can't tell you for sure where it's going to stop. And honestly, I don't believe anybody else can either. I truly, truly don't. What we can do is we can use the chart. We can do that. We can come in here and we look for the same thing we always look for. We look for support maybe somewhere where support typically shows up from history is what it is. There's nothing that says 319.10 has to be support. Over here, what is that? I'm using these two candles, the June, looks like the June 5th and June 12th weekly chart. We look at that. We look at this. Here's this week of, I don't know if you guys can see it. I can't make it any bigger. Here's September 25th, 2020, right here. I can't tell you if that's going to be support. What I can tell you is from history, this is the type of chart pattern we use to point out support. But I can't tell you that it's going to for sure be that way. The only thing in the world that can do that is one indicator, and that's price. If we get down to this level here, if price comes in, bulls come in, and if we rally up like that, and at some point we're going to need a pullback. And then at another point, hopefully above this low, because that's where we can call it a chart pattern, we're going to start moving up. And then once we cross this high, this is what we call a bullish setup right there. And you can this is a weekly chart, but you can find the same setup on a daily. You can find it on a 5-minute chart if you're into 5-minute charts. But this is what we want to look for. And when we cross that high right there, that line, that's the tradable bottom. So I can't tell you, I cannot tell you, are we going to break these lows, 362? I can't tell you that. I can't tell you exactly for a fact that we're going to stop at 299, 319, 337. I can't tell you that. All we have is the chart. That is all we have. That is the best tool we have as a trader. I think it's the best tool for any kind of trading. Now, everybody knows that I'm a short-term swing trader, okay? So long-term, you might get into the fundamentals and that sort of thing. But me, I don't care about fundamentals. I just want to look at the chart. I'm going to make all my trades from the chart. So I'm going to use the tools on the chart. And that's what I want to simplify tonight. Because I think sometimes we complicate it. We don't mean to. I don't think we set out to complicate it. I think we have a bad day or a bad week, and then we tend to complicate it because we're going to look for something. Well, I'm not going to do that again, so I'm going to add an indicator maybe. That'll keep me from doing that again, by golly. Yes, sirree, Billy Bob. Adding another indicator is going to do it, all right. So all we have is the chart. Really, that's it. Is the SPY going to drop to the 50-period moving average? It could. Absolutely could. I can't tell you for a fact that it is. What I can tell you, though, is it's on a trend heading that way, yes. Now, look, I have been very vocal recently about following the trend. I've been extremely vocal about that. I've been very vocal about who cares what's on the news. I don't care about the recession. Personally, I do. But in the chart, when I come to work, it has no business at my workplace. It has no value in my workplace. And that's because I'm simply going to trade the trend right here in front of me. And what happens 6 months from now has absolutely zero bearing on where we are now. Zero. Now, let's take Friday. We get a little news from Jackson Hole, right? So how am I going to trade that? Well, that's simple. I'm going to be in cash. Why do I have to try to be smarter and beat whatever comes out of that news? Why do I have to do that? And I don't. Why do I have to pick a side? Why do I have to pick a side? Okay, the news is going to come out and I'm going to pick the downside. Why do I have to do that? News is going to come out and I'm going to pick the upside. I don't have to do that. And then there's always the clever, we'll play both sides. I definitely don't have to do that. You don't have to do that. Okay? So anyway, I truly have been very vocal about trading this bullish trend. Well, now I'm very vocal about trading this trend right here. Simply trade the trend. That's all you have to do is just trade the trend. I'm going to post this right here in the room. We're going to probably speak of this a couple of times. Let's see if I can get this in here. There we go, right there. These are 6 little items that if you start out, I think, my opinion anyway, if you start out every day and maybe 3-4 times a day, you just take a look at that list right there. You simply want to trade in the direction of the stock being considered. You want to trade in the direction of the market. You want to plan your trade with targets, target areas, protective stops. You want to wait for an entry pattern. This might be one of the most hardest things in the world for anybody. Number 4, wait for an entry pattern or setup or pocket or whatever you want, whatever little buzzword you want to put in there. Take profits into strength or weakness if you're trading a short, and just simply have a nice day. Those 6 little things right there, if we just focused on that, and let's simplify trading a little bit, okay? So, while the market now is underneath the T-line, I am short. While the market is underneath the trend indicator here, you can see the red dots, then I have to be short. I cannot be long until this changes. An example is, can I be long down here? No, I can't. Can I be long here? Nope, cannot. Can I be long here? Yeah, I could. This is the first move over. Look, we're all adults. We're all old enough. We know. Don't be the first one to jump out in the busy street. Okay? Let somebody else go out there. Let somebody else get in the busy street. Let somebody else get run over, and then let them barricade the street, bring the ambulances in, and then when there's no cars on the street, just calmly walk across the street. Okay? Just calmly walk across the street. That's all you got to do. So let somebody else go first. And when we're at a bottom, we don't know this is a bottom, by the way, till really right into here. We don't know that that's a bottom. Only when we get up here. And how do we know that's a bottom from here? It's from looking at chart patterns. So if I was to do this, I'm going to take this and like that right there. I'm going to use this high. And why use this high? Experience. And this will, as time goes on, you will learn these things. It's part of the trading training that we all must go through. Every single one of us must go through. The smartest of traders will do it first. I'm not one of the smart ones, okay? I did not. I wish I would have had somebody that had a shock collar around my neck, and every time I went to place a trade, they would just hit that button and just shock me, because I was nowhere near ready to trade in the beginning. Nowhere near it. So many things to learn. And you learn these things right here. This is all about constructing a bottom. We learn about reversal patterns. Reversal patterns. There you are. There's your W pattern. And you know what? Not all bullish W patterns look like a pretty little W. Nope. They don't do that. And this is part of the education process. This is just construction of a bottom. Now that we've broken out, this becomes a trade. Not right here, not right here, not right here. But it requires waiting and patience. So this is one reason why I am all about a watch list. I don't like to wait. I don't have that kind of patience. So I get around that by creating a watch list, and then when those stocks fall into my entry zone, then I can trade. So there's always something there, always something there. So yes, METAP, yeah, we'll go over each one of those a little bit, okay? Each one of those six things there. So right now, I am very pro to the downside until we're not, and we need to see that reversal. So what might a reversal look like? Well, because this is more than a simple little pullback, you know, you hear buy the dip, you know, those crazy words that we like to say, and that works out many times. I'm not against that, buy the dip, but we have to define what is a dip. And there is no true definition. There's not. There is no true definition of what a dip is. Buy the dip. John's idea of buying the dip would be different than mine. Rickster's might be different than John's. Let me explain. So, let's do this. Is this, you know what, I'm going to change this to red just because it's easier to see. There we go. Is that a dip? It is. For somebody. Not a dip for me, though. A dip for me is going to be this right here. There's a dip. But this certainly could be a dip, can't it? I mean, it's the same thing as this right here. Here's a little pop-up, and there is a dip right there. Here's a pop-up, and right here would be a dip. Down here is not a dip. For me. For me. So what that means is that for me, we have a full-blown reversal here. So what's going to happen to be long? You're going to need a full-blown reversal. So what is a full-blown reversal? Let's just assume for a second, okay, that this is the bottom. Let's just pretend. Just pretend. So I'm going to need to see that low. I'm going to need to see a high. And before I go any further, look, we've all been trading a little bit. Can you see the resistance right there? Doesn't it make sense? So here we go. Low to a high. And, you know, is it going to happen right here, right to the penny? I don't know that. Neither does anyone else. I'm going to need to see that high. I'm going to need to see a pullback. I want that pullback to be higher than this low. It can be equal. It can be a double bottom. That's okay. And then I want it to break out. And this becomes the tradable bottom. So to me, this is a full-blown reversal. Only because it's gone past my dip. Okay? So you as a trader, I can't answer this for anybody. I can't do this because I don't know you as a trader. So you're going to have to fit this into your trading program. What is a dip to you? Maybe what might help with that is defining what is a trend. Maybe that's the best thing to do, is defining what is a trend. And then that will help you define what a dip is. So if this is your trend right here, right there, and I'm going to connect this low and this low. Anything down to but above might be considered a dip for you. Anything below, that's a full-blown reversal. That is a step right up, Mr. and Mrs. Reversal. Come on in, bears. Buy a ticket. Let's see where you go now. Full-blown reversal. To get out of a full-blown reversal, we need to create a full-blown reversal. Inverted head and shoulders, those are reversal patterns. Bullish W patterns are reversal patterns. We could do something like this. I'm not saying this is going to happen here, okay? I'm not. I'm more to the bearish side at this point. But if this was to happen, this is not a reversal signal. This is a signal to maybe watch, absolutely watch. And if we have follow through the top, now we have a reversal pattern. Okay? So we want to let it reverse. I know everybody has heard from so many people. So many people. Do not pick bottoms and do not pick tops. That is so true. Take that one to the bank. So here, don't pick bottoms. Let it show you that it's going to trend. I will bet that everybody in the room here, I'll bet you that you make more money when the chart is trending. And we're looking at a bullish trend only because it's bullish right here. We could make the same argument for a bearish trend, okay? I'm not trying to be all bullish here. The same thing is over here. If we are heading down and you are trading with the market, because if you're trading against the market, then I know you're not making money. You might be winning a trade or two, but you've got 42 losers over here that you're underwater on. But if you trade with the trend, I'll bet you make more money every time, hands down. If you trade with the trend, you make more money. So then why do we always try to trade with this nonsense down here? Look, I'm guilty like everyone else, okay? I can sit here and talk about this because I do that too. But why do we do it? We have to ask ourselves that question. All right, I want to talk about this trend here. Now, you guys all know that I don't draw a whole lot of trend lines. I really don't. It's because I'm lazy, okay? I'm lazy. And I'm really big on scanning for setups. I'm huge on that. And you cannot use a line like that in scans. They're just not there. Now, I say that, and I'm not here to talk about LTA. I just want to mention this one thing. Ed has created a scan that you can find using trend lines. Not my favorite scan, okay? Just not. But then drawing trend lines like this is not my favorite thing to do. So that's okay. So what I want to do is something like this. Not that. This. Let's just trade the trend. What is the trend doing? So what if we did this? What if we used the trend to set up a chart and we only used price for timing entries, protective stops, and profits? I think a lot of times what we do is we focus on price a little too much. And look, I love price. Whoops, that's not price. Oh, I need to do this, don't I? There we go. There we go. I love price. I think price is the best thing since sliced bread. But I think we focus on it maybe too much. What if we only look for charts? And remember, tonight is about simplifying charts or making them simple. Making them simple. So what if we only looked at charts where the trend is moving? Now, I have said my trend is this white line greater than the green dots. That's my trend, my bullish trend. My bearish trend is just the opposite. Now, I know that we haven't, and I do want to do one thing here, make sure, because I was playing with this. Yeah, it is. I don't always have to have the T-line below the trend indicator or below that trend line, moving trend line, to be short. Because shorting, you jump out of windows to be short, you walk up the staircase to be long. So when I look at a short, I don't have to have that all set up where the white line is below where it would be red dots here. I don't have to have that. Because shorting is just, once you're at the top of the 10th floor, just open the window and jump out. And it's true. So you have to be a little more, a little quicker in this area. So I'm going to look at that and say, okay, that is short until it's not. When is it not? When we move back up. I just can't for the life of me think of a more simple way than this right here to look at a chart. Now, don't look at price, because if we look at price, we try to outsmart the candles. Our job is not to outsmart the candles. Our job is to listen to the candles, pay attention to the candles, not outsmart them. So let's just shop for charts that's trending, whether they're trending up or trending down. There, this would be trending down right over here. So short traders, let's get aboard. Let's get aboard. I think the market has 1 foot out the window right now. And is it going to go all the way to the street? Is it going to go smack way down here? Again, I can't tell you if that's going to happen. I can tell you that we were bullish as all get out right here, and now starting to be on the bear side. Just simply follow the trend. From a trading point of view, it does not matter what happens 3 months from now, unless you're a long-term trader, and then, okay, I get it. If you are all about 3 months from now, the market is going to be down here to 300, SPY is going to be down here, I get it, if that's what you're doing. But that's not what we're doing here. We're short-term swing trading. So let's focus on the chart. Let's bring some simplicity into the chart. It's very, very, very simple. But we complicate it. Why? I don't know. But we do. I do it all the time. We complicate it. Okay? It's not... all right, let me do this. Let me go back here. This is my number one chart. This is what I like. And everything on here is an indicator. Price is an indicator. The T-line's an indicator. By the way, the trend indicator here is just nothing more than the 17 EMA. There's no secret sauce there, okay? It's just the 17 exponential moving average. You could put the 20 up there if you wanted. You could put the 20 and the 10 if you wanted. There is nothing super magical about the 8 exponential moving average. That breaks my heart to say that. I'm the T-line guy, not the 8 exponential guy, but I am the T-line guy. And it breaks my heart to say that, but it's true. What has made the T-line so popular is that traders have looked at it and they have created their trading circle around it, whether price is above it or whether price is slightly below it. So when you think about it, it's not the magic of the indicator, 50 period moving average T-line, volume, any of those. It's not the magic of those indicators. The magic is the consistency that you use them. That's what the magic is. But what happens is we have a bad day. We have a bad week maybe. So what do? We throw a new, you do, I don't do that. I really am Mr. Anti-indicator kind of guy. But I do have indicators on the screen. You can see that. But we add stuff to protect ourselves. We add, and I'm not going to get into naming indicators. I'm not trying to be, I'm not picking on indicators. You can use as many indicators you want if they truly, truly help you. But if you're using an indicator simply to protect yourself, the simple thing there is buckle up when you drive. That's the best protection you can have. Put a helmet on if you're going to ride your motorcycle. That's some protection right there. Don't go into a biker bar and be an asshole. Don't do that. That is not smart. There is no protection from that. You will get beat up. You just will. So if you have to have something to protect yourself, ask yourself, what is it you're protecting yourself from? And stop doing it rather than add all this protection, because it just confuses the chart. I want to talk, okay, so we've talked about the trend. Let's just trade the trend. Only use price for entry, protective stop, profit taking. That's what price is for. Design a trend that you're happy with. And by the way, if you are into drawing lines, believe me, that I'm all for that, okay? You ride a spider, you never go to a biker bar. Yeah. Yeah, you know, Lawrence, that's kind of funny because I'm kind of waiting to see how these electric bikes work out. Yeah, I'm kind of seeing, I want to see how that works out. So if you are into drawing trend lines and that's your thing, you know, you want to put trend lines everywhere and do that, I'm all for that. I'm not against that. But stick to that. Take price out of the picture. Draw your trend lines. Now use price for your stop, to help with your stop, your entry, your profit targets, okay? I do want to show you one indicator that I really love. If you don't use TC2000, I'm sorry, I don't know what to tell you. I've never had anybody tell me that this is anywhere else. I'm not pushing TC2000. I'm just saying here it is. They call it T2123. I doubt anything has the name T2123. It is nothing more than the accumulative 4-week new high, new low. That's it. Now, other programs may have that, so that's what you have to look for. I only look at this on the hourly chart and the 15-minute chart. That's the only two time frames I'm interested here. And by the way, I'm never interested in the 50-period moving average or the dotted deuce here. It's just here because it's on this chart. I have it on another chart on another screen, and the only thing I have up are the candles, this black line, which is the T line, and the red dots, which is this nothing more than the 17 exponential moving average. I have found without a shadow of a doubt, there's just no arguing with this, because I've tried. I have tried to argue with this. If the 15-minute is red and the hourly is red, don't be long. It's just that simple. Just don't be long. On the other hand, if the hourly is green and the 15-minute is green, don't be short. It's just that simple. So I use this an awful lot. I use what the overall market is doing an awful lot, which, let me get into that really quick, because somebody asked, could I go over number one? So I'm going to go over number one. I'm going to go over all of them really quick. We've really done a lot of them. But number one, trade in the direction the stock being considered. Okay, so let's come over here and all right, we'll take K and B. So what if somebody came up and said, I want to be long K and B? This is where, if you're a good friend and a good neighbor, you just go up to him and slap the crap out of him. Why? What is the direction right now? The direction is down. Price is underneath the trend indicator. Price is underneath the T-line. The T-line's darn near underneath the trend indicator. So why would you want to go long? To try to outsmart the market? To try to beat the bottom? Why? Why would you want to do that? Number two, trade in the direction of the overall market. Now, my market is the SPY, okay? So I'm going to look at the SPY. That's my go-to. What direction is the SPY going? So why would you want to go long KMB when the SPY is pointing to the downside and the chart is pointing to the downside? Now, I know that there's a whole lot of people here thinking to themselves, well, you never do that. You're right, you probably don't. But it is amazing how many people actually do. And they try to outsmart the market. The market is big. It's a monster. It's so much easier to trade in the direction that the market is going. It is so much easier to trade in the direction that the chart is going, rather than trying to be somebody trying to outsmart it. So let's simplify trading. Make it simple. Be able to shift gears, and here. Be able to shift gears right away. You know, don't hold out. Don't look at this and don't look at this and say, okay, we're going to bounce off this area. First of all, you, me, no one has a clue if we're going to bounce off this area. Nobody does. No amount of CNBC, Bloomberg, no amount of talking heads, no amount of the men and women that put pants on one leg at a time, just like you, can tell you without a shadow of a doubt that we're going to bounce off this area. Nobody can do it. So why do we bet on it? Why do we bet on it? I don't know. I'm guilty too. Why not wait till we're trending? I know one reason is, I know why we want to get in early, because we're afraid that it's never going to start trending. Let me tell you something. If you ever think a chart's not going to start trending, well, that's the chart you really don't want to be in. You really don't want to be in this chart if you don't think it's going to start trending. A little tip right there. Pro trader's tip. Don't buy into a chart that's not going to be, that you don't think is going to trend in your direction. Why? Okay. So, number one, trade in the direction of the stock being considered. That's all you got to do. Number two, trade in the direction of the market. Of course, you have to decide what the direction is. And that's where your trend line comes in. Maybe this blue line is your trend line. If that's your trend line, how can you possibly be long right here? You can't. If we're trending up, how can you be short? Well, world's going to pot. I mean, we're gonna, the Pied Piper's got to get paid, right? I'm 65 years old. I've been told all my life that I'm never going to see Social Security. You know what? I don't believe that's true anymore. It could happen someday, but I've been told all my life I'm never going to see Social Security. You know what? I am going to see Social Security. I am. Unless they take it away in the next 6 months. So, just trade what's in front of you. Don't trade what might happen. What might happen. We don't know what's going to happen. Okay, where are we? Number 3, plan your trade. All right, let's talk about that. Let's plan a trade. Let's plan MO here. Okay, planning a trade. This is, I think I've made this so simple. And while I'm right here, this is a good time to talk about this. And I want to reach out to everybody here and say thank you so very, very much. Well, not everybody here. Okay, sorry. To the members of Hit and Run Candlesticks. Not everybody here is a member. I want to say thank you because, let me point to why. Now, we send out alerts on the app. No big deal, right? I don't know. What do we, let's look for one here. Bought. There we go. Bought Oxy calls, October calls, 6250. We send this out on the app, all right? So if you're a member and you have this app, then what happens is if you're in the room, you get it in the room too, but you get it on your phone. It pops up. This is what pops up on your phone right there. And this is the Hit and Run Candlestick Trading Room. This is what pops up. Right after this takes just seconds to put up. Just seconds. Right after that, it takes about, I don't know, if there's members in here, if you agree with me, agree with me. If I'm wrong, please correct it. I'm going to say 5 minutes at the most, maybe. What I've been sending out lately is an Oxy Trade Logic. So this goes out right away. Following, and I mean just a few minutes, 5 minutes, this goes out right here. It's a video. The video, I try to keep it under 2 minutes, many times under just a minute. You click on that, you've got a video of the logic behind it. And that's what I'm about to show you, okay? The logic. Why buy Oxy? Why did I do that? So, let me come up here. So I've had a lot of great feedback on this. Just absolutely fantastic feedback on this. So thank you. So I'm going to set this up. Okay, I'm going to set this up. So what we're going to do is we're going to do a little pretending right now because some things aren't true. For instance, what direction is the market going? It's going down. So we're already breaking a rule, right? But we're going to set this trade up. Look, even when the market's going down, there are some charts that do move up. For instance, the market's moving down and we made a killing on energy today. An absolute killing to the long side. All right? So there are those pockets. There are. So let's just pretend right now that the market is moving up to stick with our 6 trading rules. Okay? Now let's take a look at MO and let's set it up. First of all, is it trending up? Yes, it is. Now let's do this. Put our stop on. What was it? Number 3. Plan your trade with target areas and protective stop. Stop. That's going to be where my stop is, the low of today. Look, I don't want to put my stop down here. I'm not into that. If I see a chart and I want to buy it, I want it to go up. It's okay if it wants to move sideways a little bit, but I don't want it to move down 2% before it moves up. It's just me. Now, somebody else might be different, and that's okay. That's all right. But this is how I'm going to set this trade up. Now, what I'm going to do here is I'm going to darken up a couple moving averages because I use a lot of moving averages. I don't use a lot. I just use them a lot. So right there. Here's the dotted deuce, and there's the 200 period moving average. I also use price areas. So here's what I'm going to do. I'm going to, first of all, put one at the dotted deuce. That's just a slam dunk. That is just absolute guaranteed going to happen. From there, I could adjust it based on price, but I'm pretty happy where that's sitting. Number two, I'm going to put it on the 200 period moving average because this is a rounded bottom breakout. So I have to use some rounded bottom breakout rules here. And the 200 period moving average is my max target for a rounded bottom breakout. I'm not saying it can't go higher. I'm not saying that. In fact, we're gonna create the trade plan here going higher. Now I'm going to start looking at some price action. I'm going to come right over here. I'm going to put a target in this area, and then we're just going to put one right there and call that quits. Okay, we've put our stop in. We've put targets in. We've done that, right? Now what I'm going to do is I want to know, can I make money at this? And I'm also going to put my entry in right now. Here's what I want to do. Can I make money at this? And let's move this all the way down. There we go. We're looking at 18%. That certainly is good enough for me. I've got an 18% playground. Now here comes the entry. I'm going to come over here and box that bottom in. So entry or maybe a breakout. And what I usually do is I may not be so picky exactly where I put this, because what I'll do is I'll come over here and I'll get this little thing and I'll put it right there. And that just reminds me I'm okay with a breakout. That's all. And then what I'm going to do is change this color. Right there. There you go. There's your trade plan. It was not hard to do. Not hard. Now, granted, you do need to know where to put targets. Newsflash, that's first grade material. All you want to do is put it where price has had an argument with itself. That's all. That's all. Where has price had an argument? As many touches as possible. And I like major moving averages. That's it. That's first grade stuff right there. That's crayon, big poster board crayon kind of work. Pretty simple. And there you go. There's your trade plan for MO. Let's see. I saw a question here I wanted to get to. Steph, why buy Oxy 6250 calls? Well, I don't know. Let's go look. And I don't know. Let's see. How do I do this? Whoops. Yes, I want to unlock it. Let's go look. And it might not be there right now, okay? So, there we go. I think it was October, wasn't it? And 6250 right here. I can tell you right now that the 6250 calls was not an 81 delta when I bought it. It was more in that 70-ish delta. And Steph, is that what's confusing you? Or let's see, why buy Oxy at 6250 when Oxy is trading over 70? It wasn't trading over 70 when we bought it. Okay? It wasn't trading over 70 when we bought it. So what you're seeing, what you read up there was past, not current. Alrighty? Does that help? Let's see. Let me move this back before I get myself in trouble with this thing. There we go. Alrighty. Rickster, yeah, true, yeah, Moneyball. Once breakout, would you expect it to pull back? Are we, I don't know if we're talking, whoops, MO. Are we talking about MO? And so let's break out. Do I expect it to pull back? Not necessarily. Not necessarily. So, I mean, for instance, whoops. I don't know. Is that a pullback to you? It might be. You know, a pullback to me would be a pullback like that. And no, I don't expect that. If I expected that, then I'm not going to buy it, because that's not what I want. I want stocks that I think are going to move up, not necessarily pull back. Now, we can't control that. We can't control that. So I don't really think that is your question, to be honest with you. I don't think that is your question, because that is I think you have another question you want to ask. Think about it. I really do think there's another question here. Because when we buy a chart, we're expecting the chart to go, and we're going to go up because that's the direction we want this to go, right? So I expect it to go up. At the exact same time, I do not expect this to happen. Bullish candle, bullish candle, bullish candle, bullish candle. I do not expect that to happen. No. I do expect to follow through, maybe to take a little breath, to follow through, maybe a little breath, follow through. I do expect that. And if that doesn't happen, then I don't want to be in that stock. Hope that helped. And if not, ask me maybe in a different way or something. Maybe I'm not hearing it, you know, what you're asking there. Let's see. So delta is the most important thing to look at. You know, I love doing this part right here. And I'm going to bring this back down for you. I love doing this. And I want to shout out to Doug. I have no idea if Doug is here tonight. I want to shout out to Doug. A few years ago, I never traded options. I was the poster child for anti-options. But I called Doug up, and, you know, we have a Skype connection. Hey, Doug, can you show me about options? I want to try this out, okay? True story, guys. This is very true. And Doug tells me, he says, Rick, you're pretty good at calling direction. So just trade directional, start out. He didn't say just, you know, start out trading directional calls and puts. In other words, trade directional longs and shorts. That's all it is. And then he told me, try to stay, you know, in that 40, 50, 60, 70, 80, 90, 100, 200 day month out, okay? Go out far enough for it to work. Go out far enough where you're not getting killed on decay, things like that. So that's cool. Then the next thing is, he told me, hang around that 70 delta area. He's been trading options an awful long time. He knows what he's talking about, okay? He really does. So who am I to call him a big fat liar? I'm not. I'm going to listen to the man. And then that's what the man told me. So that's pretty much what I do. Now, nowadays, I don't mind buying a 59 delta. I don't. But I do hang around that 70. So this is the part I love. Now that I've told you the story, this is the part that I love to talk about. I call it one and done. one and done. I'm going to show you this one time. That's not true. I'll show you as many times as you want. But let's just keep going with that one and done. I'm going to show you one time, and it's this way every single time. Every single time. Choose a month that's out 40, 50, 60, 70, 80, 90, 100, 120, over 40 days, okay? Over 40 days. That's all we really need. So let's already, the October is already picked here. That's number one. Number two is look for open interest, and honestly, if it has 4 digits, it's big enough. It's big enough. So I want to see good open interest around 70. Around 70. Is 65 okay? That's okay for me. Is 81 okay? It is okay, but I rarely do an 81 delta. So in this area right here, let me go get some crayons going here. Let's do this tool. Let's do, whoops, frame. There we go, frame. Let's see, does red look good? Yeah, red looks good. So we're going to come over here, 1, and then 2 is open interest, plenty open interest, delta. There's a 71, that's good enough for me. That's one and done. It's that simple. This right here, the option chain, is truly the reason why I was the poster child to stay away from options. Simply because it was so confusing. Now, once I was educated on this, the confusion was gone. Confusion was gone. So, 1, go out plenty days, 40 days plus, 50 days plus. 2, open interest, match it up with delta of around 70. Done deal, right there. Since we were talking about MO, let's look at MO. We're going to go out October. Whoop. That's a no-go. No open interest. Let's go out to November. All right. There we go. We can do that. There's a 75. That works for me. 42.50. There's my trade. 62. Yeah, that would work too. But I would probably do the 75, 42.50. Does that help, Steph? So 1 is the month, 2 open interest, 3 delta. You're very welcome. I'm glad I was able to square that up with you. It truly is one of the, it's just as easy as setting targets, if not easier. We just don't complicate it. Don't go off the reservation. No, you still want a 70 delta. You still want a 70 delta, Steph. Or close to it, around that 70 delta. I know that was confusing for me too, but that's what you want. Let's see here. Carol, with the trend right now, and I'm assuming you speak of the market, with the trend right now, would it be unwise to buy MO? Well, I don't know. Trading 101 with hit and run candlesticks. Number 1, trade in the direction of the chart being considered. Number 2, trade in the direction of the market. Uh-oh, I can't place that trade, can I? So, I can't tell you that you have to follow 1 through 6. I can't tell you that. I can tell you from experience that if I follow 1 through 6, number 1, trade in the direction of the stock being considered. Number 2, trade in the direction of the market. Number 3, plan your trade with a target areas and protective stop. Number 4, wait for an entry pattern. What was it? Number 5, take profits into strength or weakness. And number 6, have a wonderful day. I have found that if I followed that very basic, very simple little rule, 6 little rules, that trading works out much better for me. So on MO, can you take MO? Sure, you can. You can. And MO, it's one of those consumer defensive stocks, and it just might work out. I do want to throw a hair of caution out here. Just because the market is moving down does not mean that defensive stocks go up, okay? It does not work hand in hand 100% of the time. Just saying that, okay? So, is that little breath of a pullback? Moneyball without a ticker symbol, I'm not sure which one we speak of. I guess we've only really looked at the SPY and MO. Yeah, you know what? If you want to type that question but put the ticker symbol in there, we can talk about that, okay? Let's see, Michael. On MO example, if you've entered and price retraces back to inside the entry envelope, okay, do you exit? Inside this box? No, I don't exit. No. Many times I'll buy more. This is my entry zone. Now, you know what? Let's talk about that, Michael. Maybe you bring up a good point here. Maybe you do. So you buy MO and it pops up and it pops up. If it pulls all the way back, that's bad on you. You should have taken profits up here. If it just sort of whimpers and pulls back, I'm perfectly fine with that. Now, one thing we want to consider on this pullback, what did the candlestick look like? Yeah, we better do that. All right? So what if the candlestick looked like this? We're still in that box. What are you going to do? Me, I'm going to run. I'm going to get out. Because I understand candlesticks. And I know what that's telling me. It's telling me, Rick, don't be there. Is what it's telling me. So it's okay if it's in this box, but we have to know what price is telling us. What is the candlestick telling us? It's warning us. Don't be there. So maybe that's what you mean, or something like that anyway. Let me read the rest of your question here. Do you exit all the trade at that point, or do you wait until it retraces all the way down to your stop loss? I think I answered your question. I think I did. DC, what about the bid and ask spread? Where does that fit in the verse of parameters? A couple percent. I'm okay with that. I'm perfectly fine with a couple percent. Yeah. 5%, I'm okay with that. 10%, I better want that stock really bad. Really, really bad. Let's see, Rick, can you talk a little bit about your strategy when the market reverses midday, like today with a long wick? Well, first of all, I'm not sure that the market reversed today. Okay, now let's think about this. Did the market reverse? For the market to reverse, it had to actually go up, didn't it? Please point out on this market where we were bullish at any point today. At any point today. So I'm going to say you're one of those people that's into bottom picking. Send me your address, I'll get on Amazon, and I'm going to send you a box of rubber gloves. Okay? So show me where we reversed. We didn't. There was no reversal intraday today because there was nothing to reverse. To reverse, you would have had to have a bullish candle. There was no bullish candle. Now, I'm going to read a little bit into your question, okay? Here's a rule that I think everybody should follow. If you're looking at the daily chart, you cannot judge this candle until the end of the day. If you're looking at a 15-minute chart, you cannot judge this candle till near the 15-minute. Time is up. You can't judge it. So, on the daily, you can't judge this candle at noon. You can't judge it at 1 p.m. Eastern. You can just start judging it that last hour. You can judge it the last half hour. You can judge it the last 15 minutes. But you cannot judge this candle until you get near the end of the day. All right? Cool. Thank you. Great question, by the way. That was a top-notch question. Thank you very, very much for that. Let's see here. Where are we? You know, and we need to get through some of these, so a couple more questions, and I promised some people we would go through these, okay? Let's see, Rick, are you using stops to enter options? If so, do you just market fills? Is there ever time that you try a limit order on your options? Here's what I do. Let me share this with you. Whoops, don't do that. Oh, I did that. Darn it. Hang on. One sec. Had to close it real quick. Now I'm bringing it back up. There we go. Say yes to this. I'm going to put this right here and say yes to this. And I'm going to put this right here. All right. This is the ticket. All right. So let's do what? Let's take Apple just for giggles and grins. And I'm going to come out here to October. That's where I'm going to start. I see plenty open interest. There's a 70 delta. Okay, watch this over here. So here's 74 delta, 155 strike. I'm just going to click on that and see it loaded the ticket. Okay, so there is the bid and the ask. I always put it on the mid price. I mean like 100% of the time. Put it on the bid price, and then what I do is I'm going to make sure that's on. So I've got a 2.74% between the bid and the ask. Somebody asked that. I'm perfectly fine with that. There's the mid price, and then I'll hit buy, just like that. And then if I want to continue, then I hit send order, and then poof, the order is sent. That be what I do. I hope that helped. There we go. Hello, Mr. Rob. When trading with the direction of the market, have you ever considered looking at individual sectors rather than the SPY? Well, I'm looking at the SPY to seeing what the overall market is doing. Take energy as an example, okay? If you want to trade MRO, for instance, well, you might want to make sure that XLE is working in your favor. So yes, you could certainly do that. I have tools that does this for me. Okay, Let me share that with you because it's still open. Let me share that with you. I have tools that do this, and you can have these tools. They're not like special to me. But take energy. I can see that energy is moving, and when I see it moving, then I might focus on that a little bit. If I see over here that a particular spider is moving, well, I might focus in on that. But what happens is I'm broken down right here. So, financial, I can see what financial, electric cars maybe, payments, SMH. This is kind of doing what you're saying. And I mean, this is what I use to do that. And you can, this is live trading alerts is what this is. And I mean, you can have the same thing. There's nothing magical about it. I've just done a setup like this, linked them all together so I can move it if I need to move it anywhere. Real easy to do. So yes, I think what you're talking about there is right on. I just use the overall market for my overall direction of the market, not just a sector. Because if the overall market is moving down and you try to go long, you have not changed the fact that this 800-pound elephant is stepping on you. You have not changed that fact. And I don't like to go against a pissed off 800-pound gorilla. I do not like to go against it. It will bite you. So, let's see. Thank you, B1. All right, hey, let's run through these. I think that's, well, maybe not. If the SPY is trending down but energy is trending up, consider taking energy trades. We just covered that, yeah. And that's what we did today. Yesterday, we took some energy trades. Yesterday, we took, what was it, XLE, Oxy. Could swear there was another one. I know there's another one. And I sold them today because I had to leave early and all that stuff. Absolutely. Shell. Thank you, Mike. You're right, Shell. Shell, by the way, was a alert from Ed, the creator of Life Trading Alerts. He's the one that threw that out in the trading room, that alert. I looked at it. I like that. And I bought it. Let's see here. Yes, totally manual stuff. Yes. If Steph, here's my opening, okay? I'm going to use you and take this opening. If anyone's interested, there's a $49 trial for hit and run candlesticks. And if you're in the room, we can do this live and you can see it happen. And you'll also, download the app and you'll get all that stuff, okay? So it's there, $49 if you think it's worth it. That is for anybody. So give it a shot. Give it a try a month. We're at the bottom. Let me whiz through these. Let me whiz through these a little bit real quick. Just because we're getting kind of late, but I want to get them all. And this is what, there were a few people here early before we actually started, and I asked them to throw out some charts, and those are the charts we would cover tonight. So I'm going to start at the top, and I'm going to go kind of fast because I'm going to set up the trade plan. It'll take a little longer, but I think we can get through it, okay? So KMB, this is a short in my book right now. So what I'm going to do, I'm going to put my stop in place. I'm going to come down here and put some targets, which that's going to be a target because it always is, the dotted deuce. We got some lows going on here, and we'll take it to right there. So now what we're going to do is put this in there. Only 8%. I mean, I say only, that's not anything fantastic. I'm not thrilled about, this being so low, but maybe, just maybe, you get a bounce to the upside, and that's where my target would be. I'm sorry, my entry would be. There you go. I just set that one up. DKNG, Fail the 200 period moving average. There's the 50 period moving average. There's going to be first target, matches up with some price action. I'm cool with that target. Let's put a stop in. If it comes back up through this candle's body, I'm not going to be happy. Let's put another target in. I always use that. And I might adjust it, like to right here. Yeah, I might do that. So now we're going to do this. And let's put the entry in. See how simple this is? Okay, we'll put this one right here. See how simple this is? In lieu of time, everyone, is it okay if we... No, I'll just keep going. What time is it? I have time. So there's a trade plan for DKNG. DVA, that's a long trade. You can clearly see the trend. I won't like it if it comes back below the T-line, so I'm just going to put just a little bit below the T-line. Targets, pretty simple. This is a rounded bottom breakout, so I always have to use the dotted deuce in the 200. I certainly may come over here and make price action adjustments, and I'm not. I'm going to keep those. I am going to put another one up here. This is the 500 period moving average, and I'm okay where it's at. It's not like I'm going to use 107.86 as some magical, mystical, that's a target, okay? I want a playground. This is my playground right there. My entry, I'm going to put my entry all the way up here. I'm going to wait for a bullish candlestick or, some bullish activity. I wouldn't mind this actually being a breakout. So I'm purposely going to put this here. So the way I'm looking at this trade, this might not even be a trade for me until over 96.80. And over 96.80, the other targets are going to still be there. But over 96.80, well, that's almost 11%. That's plenty good money. And I'm saying that because there's an awful lot of resistance right here. I don't know if I want to mess with that. And this candle pattern stinks. I don't like it. So this may not be a trade till over 96.80. Here's the Qs. Rickster asked me if I could explain the Qs, my Qs trade. I sure can. Let me do this first. So I'm working with somebody named Charlie. Actually, his name's not Charlie, but we named him that yesterday. We'll just call him Charlie. I'm working with him creating some scans. He's a new member of Hit and Run Candlesticks, and he got the scanner, and he asked me to help him with some things. He has some ideas, and we're trying to build on those ideas. And so it's using the 10 period moving average. That's the main thing here. And where price recently crossed up above it or below it. Doesn't say below, but it is. So that's actually where I got this trade. Now I'm going to change the T-line from the 8 exponential to the 10 simple, because that's what this is all about. And right there, that was the reason I took the trade. And I created this I'm going to turn this real time off. There we go. Okay. So anyway, here we cross down below the 10 simple moving average, and then I just created a trade plan, just like that. That's all I did. Now we're out of it, and notice I put my little. I was willing to buy it down below. I ended up buying it here. Yeah, close to that line. It gapped down on us. We took half off, and then I closed the other half today. Now, can it still go down more? Of course it can. But why would I risk that profit? And that's just me. Okay, that's just a me thing. So that was the trade plan. And this was because of that scan right there. BTU, somebody wants this. I wouldn't touch this with a 10-foot pole, to be honest with you. Look, I get it. the whole energy thing, okay? I get it. I get it that the price of energy is going up, but that doesn't mean that this is a good trade. I think this is a horrible trade right now. And the reason I think it's a horrible trade is because it's been up a bit too much for an entry. We're running right into resistance, so why would I want to buy that? Why would I want to buy that? So, hey, Misha, thank you very much for being here. So maybe what I want to do here is, I like the chart, don't get me wrong. I think the entry stinks. So maybe what I want to do is wait for that pullback. And there's nothing wrong with making a trade plan. You can make a trade plan here. Can it go higher? Absolutely. I think I like it down here. All right. And and this is adjustable. We're not going to be married to this. We're not buying it yet. We're just setting up a plan for something that's not even there yet. So this would be my trade plan right there. Now, can I guarantee it's going to come down into here? No. What if it does this? What if it pulls back like that and then does this? Okay, right on. Change your entry plan. What's wrong with that? Now, I can't leave this and do what I'm about to do, so I've got to remove this. So why not move your buy box up? What harm would that be? There's your trade plan now. Just like that. Amazon. Here's a trade plan we did with Amazon, both long and short. And by the way, it was created over here. So see how the long worked. There's your entry if you're into doji entries. It didn't do what we wanted it to do, because what it needed to do was give us a bullish candle. It never did that. It just gapped right up. So here we hit the 200 period moving average. We're moving down. This sets it up. This is what we had set up if we failed here for a short. So now this certainly could have been shorted right here. Absolutely. It's still set up for a short to the downside. Targets to the downside. One's going to be right here. One is going to be right there. Look, this is not rocket science. Seriously, this is easy stuff. 200 or 50 period moving average, because that's what I do. For no other good reason. No other good reason. Just that. It's what I do. I like it. So I'm going to put a target there. And that's my target. Let it see if it's going to work. And this here was the last target down here. So you've got about a 14% area through here. And that's from this center line is where that's from for Amazon. Let's see, question up here. Hold on here. Sam, a couple questions up here. Hey, John, thank you very much, John. Thank you. Sam, do gaps change in any way the 6 points on the trading plan? They do, in the sense that that's a whole bunch of candles, okay? And then we gap up. Now, I guess no, it doesn't change now that I think about it. It doesn't change anything. Now, what I'm going to do is I'm going to wait for follow through to the downside. Below that line can be short. Above that line is long. But I rarely take a gap trade. Rarely do I take a gap trade. It's just not my style, just not my thing. Doesn't mean it's bad, just not my thing. I have a whole, which we're running out of time now, a whole thing about candlesticks trade against candlesticks. And if we gap away from the candlesticks, you have nothing to compare this to. So I have to wait till this candle's finished and then trade based on follow through one way or the other. Let's see here. Can you touch on how you handle stops on options? Hardest thing in the world, Vic. I'm not gonna lie to you about that. All right. The program that I have, it might be in the new version. I just haven't downloaded the new version, where you can go in and you can set your stop and it automatically calculates it to the option. There are some programs that already do. I think Thinkorswim might do that. I could be wrong. I don't know. I don't use Thinkorswim, so I don't know. But that is one of the most difficult things there is. Yes. Now, the program I use, TradeHawk, there is a way you can do it, but it's a bit cumbersome, and I don't do cumbersome. I just don't do cumbersome. In trading, in life, I don't do cumbersome. So I don't use it. But that is one of the most hardest things to get through right there, is how you handle stops on options. That is tough. But the program you use, if it will set you up where you can say, I want it to be stopped out at 131.29, and it automatically calculates the option, keep that program right there. That's a good program. That is a tough one. Let's see, Steph, what is the ideal minimum amount of volume you like to see in a rounded bottom breakout? Is there a minimum amount of volume that you know? I'll tell you. Why do I have volume down here? Honestly, to fill space. If I could put Disney characters down here, I would do it. Okay, Steph. Volume has no place in trading for me. None. To start with, let's go look at this chart, Hershey. So let's look at Hershey here. Please tell me how volume is going to help. And I know there's some volume people in here just biting your lip. I know that. Okay. And that's okay. It's all right. You bite your lip. I'm going to do what I do. You do what you do, and let's all be happy. But please tell me how volume is going to help you do anything with this doji, bullish, engulf, and hammer. There is nothing about volume that's going to help you here. The answer is all right here. There is no volume right here that told you this was going to gap up. Not ever did any volume in here tell you it was going to gap up. Not ever is that going to happen. Where is the volume? How can volume tell you anything about that candlestick? See, candlesticks are created by traders. If there's no traders buying it, it's not going to go from here to here. The volume is in the candlestick. I really don't use volume, okay? So it has no place in trading for me. I trade the candlesticks. I'm a very short-term swing trader. Let's take that Oxy. Please tell me how volume told you that it was going to go from here to here. Remember now, volume is a lagging indicator. So nowhere on this candle did volume tell you it was going up. People will tell you that, but they only tell you that after the fact, not before the fact. Nobody ever does that. Nobody says, hey, the volume is ripping. No shit, Sherlock. Look where that chart is. Look where that candle is. Surprise, surprise. The only way to go from here to here is with volume. So nowhere do I consider volume. It's just not there. Seriously, I should put up some other indicator down there. The problem is people would say, are you now using that indicator? If I could put Mickey Mouse characters down there, I would do that. I really would. Anyway, I hope that helped you there, okay? Simplify trading. Candlesticks is one of the coolest things in the world once you get over the curve. And there is a learning curve. It's not something you wake up, you read one book, and wham, bam, you're a candlestick whiz. It doesn't work that way. But you will, if you follow the candlesticks, don't use crutches. Don't use crutches. Volume is a crutch. Don't use crutches. Take the time and study those. And it's all right there. all the answers is in price action. It really, really is. It's hard sometimes because you want to look at that stuff. But all this volume down here is not telling you this is going higher. It's not. It's not telling you this is going to go down. None of this volume is telling you that. The price is telling you that. Anyway, I hope that helped. Let's see, Victoria. This was some really great info. Oh, thank you very much, Victoria. Appreciate it. Stops on options set, crush and losses. Stops on options get. Stops on options get crushed. Thank you very much, Michael. Appreciate it. Thank you, Steph. Steph, I want to just scream out to you. You had a lot of questions tonight, and they were all top notch. Thank you so very much for being here and asking those. Carol, you as well. You got in there too, so thank you. Appreciate it. Let's see. When I scan for the rounded bottom breakouts, I'm overwhelmed with how many results I get. Are there any criteria that you use for hits? Steph, by any chance, do you use the LTA scanner? Or are you just scanning another means? And it's okay if you are. It's all right. I won't get mad at you. Where's my rounded bottom breakout? Oh, don't do that, Rick. Rounded bottom breakout. Where are you? Where'd it go? Oh, here we are. You use FinViz, okay. Like I say, I won't bite you because of that. I think you should use the scanner, but that's okay. All right, so here's the way I have mine. Holy moly, Rick. And that's a simple. Let me find a simple one. Simple. Rounded bottom breakout. What does this one look like? No. Huh. Well, shoot. All right, here's some things you might do. Let me see what's in here. None of that's going to help you. None of that's going to help you. Now, see, I only have 31 here. Oh, here's one thing here. I've got this price above the cloud. Price above the cloud. That's going to knock it down some. Minimum recent volume. And I'm looking for volume. So I guess I do use volume in scanning, but not the chart. I want, and this just weeds out junk. I want it to be on the 50 days, past 50 days, I want at least 400,000 shares each and every day. So that's one thing I do to thin things down. All this stuff here, I wouldn't worry about this. Yeah, I wouldn't worry about that. That's just a specific chart pattern. Rising moving average, the 25 rising 10 days, counting 5 days ago. Boy, this is not simple. This is not a simple one for sure. But the main thing would be the rising. And if you're into the cloud, you can put it over the cloud, you know, price over the cloud. That might help. Oh, and I have this only on the hourly chart. So on the hourly, it's above the cloud. So that's just something I have for one of my round. I've got more. I don't know where they went to. Yeah, I don't know where they went to, but they're there. They're behind something. You're very welcome. Yeah. Another thing is look for bullish candles. Look for bullish candles. Take, I'm going to get rid of all that. GM is a rounded bottom breakout. You might, only look for bullish candles. Like this would never come up on it. I just knew GM was one. So it's like right here. This all would be, so maybe a rounded bottom breakout and a 3/8 trap. There you go. Maybe that's something to do. Add in your rounded bottom breakout, make sure your volume is good. If you want to put it above the cloud, that's fine. But you might want to look for, add to your rounded bottom breakout, add a 3/8 trap, and that's where price is trapped between the T line and the 3 exponential moving average. I use the high. So this is what it would look like. There's my 3, and change that back to exponential. There we go. So, like right here would be a 3/8 trap. Right here would be a 3/8 trap. Right here would be a 3/8 trap. This would not be a 3/8 trap, and this would not be a 3/8 trap. So a 3/8 trap and a bullish candle is what I would want to look for. This would be a 3/8 trap, and it's just barely a rounded bottom breakout. Here's snow. So right here would have been a rounded bottom breakout. That would have been one. This is not one. Anyway, there you go. I hope that was helpful. Let's see. Oh, you're welcome. Yeah, I use the high. I know some people use the, this is probably a bad chart example. Some people use the last price, and there's nothing wrong with that. Okay, this is just my choice. I'm just throwing a bigger net is all. Just a bigger net, catch more minnows. Bait fish is what I want. I want to catch the bait fish, and that's what gets me the bigger fish. No, very poor way to put that. So I just use the high, and see, it opens up that net right there. Yeah, it opens up that net. Let's see. Where are we? Hey, X, how you doing? When can we expect to see this as a recording on YouTube? YouTube, not till late tomorrow. Those that registered will get it ASAP. Possibly even tonight. Let's see. Jay, bullish candle at the end of the day or bullish candle at the open? The live trading alerts, it's just a bullish candle as long as it's a bullish candle. I just wanted a bullish candle. For instance, this would not come up for me. You can ask anybody in the room. I'm always only looking for bullish candles. I could care less that we've moved up and pushed down. If it's a black candle, I'm not interested. This would never come up on my scan right here. If all of a sudden it turned into for me, a white candle, that's my bullish candle, then it would come up on the scanner. Let's see. Okay, all right. I think we're there. Did we get enough of these? Hershey here. Look at. Let me get rid of this here. CTVA. There's way too much resistance up here. Way too much. There's better charts out there. Simple as that. HRL. Target. Yeah, I'll probably have to do that. Everybody's going after defensive stocks because everyone thinks the market's going down. And maybe the market is. I don't know. There you go. Trade plan. Boom. Just like that. In lieu of time, I'm not going to turn that red. United. United is a short. Absolute short. So target to the downside. I can see where, well, yeah, yeah, it doesn't matter. Long or short. It's a short to me because we're below this area. It's not a long. So short, there's targets right there. Pretty simple. I would never short it right here. I would only short it with a sell signal. SBLK. I'm betting, well, I don't know. I shouldn't bet. I always lose when I bet. To the long side, I wouldn't touch this with a 10-foot pole till it's over $27. To the short side, I wouldn't short it till it's under $24.50. Fang. Big old shooting star here. Just might give us a pullback for an entry. I kind of like that. Targets. Boom. Top. There we go. So, yeah. I kind of like this trade. Only if it comes back to me. And I'll certainly adjust this. I cannot predict. I can't predict where the bulls come in. I can't do that. I can't say, hey, right here, guess what? Bulls are going to come in. And you know what? Newsflash, neither can anybody else. So so we wait for the bulls. If that's where it's at, great. If we move back here to right there and the bulls come in right there, okay. All we have to do is adjust our trade plan. Nothing's going to change. The targets do not change. We just change our entry and stop. That's all. That is all. Pro Bowling Association. This is a nice chart. I like this. Nice trend. Pretty good here. A little bit of a top. There we go. Let's just do that right there. Boom. Breakout. I can see that being bought here, but stop better be tight. Targets, piece cake. Something like that maybe. I'd watch right in there. EVGO. Okay. Trade plan coming. We're going to do this pretty simple. Boom, boom. There we go. Entry. Right in here. Put your targets in. 200. I'm going to go right here. We can put one more in there. Doesn't matter up here though. Follow price. So there's the entry or a breakout. Not hard. I'm going to put that there for a breakout. 41, 42% from the bottom to the top. Plenty room to make money. We don't know if it's going to actually follow through from here, so we want to make sure that the buyers are stepping in. UCO, nice gap up. I like that. I wouldn't touch this until it proved over 50 period moving average. So here, this is going to be an easy one to do a plan on. Boom. Targets. This is the boring part right there. Target. Ugh, there we go. Here's my trade plan. Doesn't even start till we get over the 50. Entry in this area right here. So, remember early on we talked about if you feel you have to buy it here because you're afraid it's not going to go any higher, that's not the chart you want to be in. You want this to prove itself. Prove, test, buy. Yeah, you want this to prove itself. Halliburton, that's a nice chart. Over 32.20. You don't have to be in here to make money. And if it's not going to go higher, you don't want it. You don't want it. If this chart can't get, here, let's do this. We're going to throw some fib lines on it. And I'm just going to use this blue line. And right there. If we can't get, and I just went to the 50% mark. If you can't get to here, if you don't think it's going to get to here, you don't want this chart. You don't want to get all hyper about it right here. I mean, there is a load of resistance right through here. So you don't want to hyperventilate here. You don't want to have to take pills because this thing makes you nervous. Oh, I have to get in. No, you don't. No, you don't. Over the dotted deuce, I could see that. That's 18%, and that's enough money for anybody. You don't have to be in it any less. And that's just something I've learned the hard way. All right, we're going to call it a night. Thank you, everybody, for being here. I truly, truly appreciate it, okay? I really, really appreciate it. Thank you so very much. Thanks for all the fantastic questions. We'll see you guys tomorrow, okay? Check out the trading room. I hope you can get those, get that app downloaded. Check it out. Anyway, thanks, everybody. Take care.